We're tired of seeing our brothers and sisters being sent off to war over things we don't believe in for oil for the profits of few.
Take your money out of this bank. But this bank works against.
I wanted to take my money out, and now they're closed.
Because of their unfair practices, the way they're taken from all of them.
We are here to demand that the banks put people over profit.
Do y'all remember what it was like back in 2008 to 2011? I do. Foreclosure was everywhere. Job loss was everywhere, guys. And right now we are getting super close to having foreclosure activity near where we were at pre-pandemic. And the reason why that's so astonishing right now is two reasons. Number one, people should have been able to just sell their house because of obviously the overwhelming amounts of equity growth. But number two, loan modification, quite frankly, has proven highly successful at keeping families in their house and giving them a hand up off of the ground. So the thing is, guys, on top of that, we also had a foreclosure ban the last 2 years. So we reset all of the foreclosure activity. So the fact that in less than a year, we're already almost back to where we were pre-pandemic, you guys, is astonishing to me. But don't ever forget how bad things can get, because here's the thing, guys, right now, the data is not telling us the true story of what's happening. So I think it's really important that we take a look back at 2008 just to see how foreclosure starts and foreclosure activity essentially exploded overnight. And today what we're going to do is we're going to dig into a few articles, guys, just to really understand the data, understand where we're at right now compared to where we were back in 2008. And we're going to review an article from Adam titled, U.S. Foreclosure Activity Continues to Increase Quarterly, Nearing Pre-Pandemic Levels. Now, you guys remember, I'm not a financial advisor, even though my bio was someone that had a foreclosure in 2008, a bankruptcy, a repo, and a tax lien. And also, I know what it's like to crawl my way out of the gutter, position myself to where I own real estate right now. I have phenomenal credit, you guys, and I have the ability to empathize with people that are actually struggling. And for that bio, you guys, do me a favor, like this video for me, please, guys. Like this video, share it, comment below, subscribe if you haven't already, guys. But let's dig into this data right now so that you're not blindsided when the foreclosure wave actually explodes. And this is a pretty good article here, guys. Obviously, I also use Black Knight, and I lean on Black Knight usually to get foreclosure information, but they lag so far behind. It's refreshing that Adam actually has similar data. So let's read this. October 13th, 2022, Adam, a leading curator of real estate data nationwide for land and property data, released its Q3 2022 U.S. foreclosure market report, which shows there were a total of 92,634 U.S. properties with foreclosure filings, default notices, scheduled auctioners, or bank repossessions, up 3% from the previous quarter and 104% from a year ago. But again, that's not fair comparison because we had the ban last year. The report shows there were a total of 31,836 U.S. properties with foreclosure filings in September 2022, down 8% from the previous month, but up 62% from September 2021. So the thing, guys, is, historically, this is very low. 31,000, foreclosure filings is super historically low. Now, obviously, that's 31,000 families, so that's not cool for them, and they're really going through, some hard times. But historically, I'm saying it is low, actually, historically. Let's continue. Foreclosure starts close to pre-pandemic levels nationwide. Lenders started the foreclosure process on 67,000 U.S. properties in Q3 of 2022. Up 1% from the previous quarter and up 167% from a year ago, nearly reaching pre-pandemic levels. And again, you guys, that is so astonishing to me because we reset it by putting the ban on foreclosures. People have a ridiculous amount of equity right now, and loan modification has proven to help so many people. So to me, This is telling us that there's a lot of bad things happening in households right now, and all of this data that we're reviewing is lagging. So this can, quite frankly, is going to explode because specifically of inflation and unaffordability. Let's finish. Foreclosure starts, while rising since the end of the government's foreclosure moratorium, still lag behind pre-pandemic levels. Foreclosure activity is reflecting other aspects of the economy as unemployment rates continue to be historically low. And that's a deception in its own, but I'll move on. And mortgage delinquency rates are lower than they were before the COVID-19 outbreak. So in other words, you guys, we have one more data set that's nearing pre-pandemic levels, which unfortunately is foreclosure starts. Now, right now, we already have serious delinquencies or mortgage holders that are 90 days or more past due. That is well over pre-pandemic levels. And also, huge indicating thing here is serious delinquencies are actually at 2007 and 2008 levels. People that are in serious delinquency status are the biggest at risk of foreclosure. So again, you guys, this activity, a lot of the things in foreclosure market is actually catching up already to pre-pandemic levels, and we're less than a year off of the foreclosure bans. So again, you guys, unaffordability, inflation, quantitative tightening, it is really going to hurt us. This is really going to hurt us. I'm scared myself, and I have multiple sources of income. I'm preparing for this. I'm well established, and I'm starting to get freaked out. 39% decline in mortgage applications. And you guys know predominantly I'm in the mortgage industry. Also, obviously, I'm a realtor and teacher, but I'm starting to get freaked out here, guys. And again, this can all blow up virtually overnight. Let's get back into the article. So essentially, you guys, this chart right here is US foreclosure starts, and this is going back to 2003. So if you look at this chart alone, this implies that essentially we have nothing to worry about, right? Because look at how much lower we're over here. Look at how much lower the starts are from the Great Recession, which is right here. So, at first you would look at this and say, oh, we're fine. But, take a look right here, guys. This vertical line right here represents Q4 of 2008. So I just want to show you from Q4 2008 to Q1 of 2009, huge explosion of foreclosure starts of over 100, probably more like 120 foreclosure starts. So in one quarter, that greatly exceeds where we're at right now. And that's just an additional foreclosure starts. If you look, so from here, this quarter to this quarter, you guys, massive explosion in foreclosure starts. So I just want you guys to be aware of that. So even though right now we have historically low foreclosure starts, it doesn't matter if unaffordability and inflation is crippling households. We could quite frankly wake up one morning and half of America is under foreclosure risk again, right? So that's why I'm saying stay ahead of the unaffordability, stay ahead of the inflation. Don't buy a house right now and wait for the dust to settle, because quite frankly, it's just too expensive and too risky to own right now. And that's a fact. We have all this data, you guys. But let's jump back into this data. Let's jump back into the article just to get a better idea of how things can explode. And also the reality is we have a lot of things in place right now that should prevent families from going into foreclosure. States that posted the greatest number of foreclosure starts in Q3 of 2022 included. Now, this is different, you guys. Now, obviously, it's not been California and Texas, and I have been questioning why isn't California on the list and Florida and Texas, but that has finally changed. And to me, it is revealing that we are starting for sure, even though this is lagging data, we're starting to crumble. It's finally hitting California, Florida, and Texas. So let's read this, including California, Florida, Texas, Illinois, and New York. So we have big states now on this list. Obviously, Illinois has always been on the list, but we now have big states on the list that are experiencing a huge increase in foreclosure starts. Among the 223 metropolitan statistical areas analyzed in the report, those that posted the greatest number of foreclosure starts in Q3 2022 included New York, Chicago, Illinois, Los Angeles, California, Philadelphia, Pennsylvania, and Miami, Florida. Can you guys believe Miami is number 5 on here? This is a huge shift from last quarter, you guys, at least from Black Knight's data. That's crazy. Miami's on the list, rich Miami. So obviously the rich can't even afford to live now. Isn't this amazing to you guys? So once again, guys, this lagging data essentially painting the picture of California, Florida, and Texas is telling me, hey, we're about to have a foreclosure crisis. Maybe not right now, maybe not at the beginning of 2023, but we're going to have a crisis because things are getting worse and even more unaffordable. And a lot of people are blind to that. A lot of people are looking at the starts and delinquencies and saying, we're fine, we're fine. But again, you guys, serious delinquencies are 40% above pre-pandemic and where we were at in 2008. Serious delinquencies right now. So again, put it in perspective. Let me show you guys another chart. So here's another chart, guys. This is basically bank repos, or when the bank actually seizes the property. So the foreclosure process is finished. And as you can see, we're way, way down here. And look at here again, guys, in the great financial crisis. I mean, it spiked in 2010. So Q3 of 2010 was essentially the worst of it. And then it got better from there. But, pretty radical. So let's read what this has to say. Lenders repossessed 10,515 U.S. properties through foreclosure in Q3 of 2022. That's up 18% from the previous quarter and up 39% from a year ago. Very few of the properties entering the foreclosure process have reverted to the lender at the end of the foreclosure. In fact, nearly 3 times more homes were repossessed by lenders in the second quarter of 2019 than the second quarter of 2022. So again, you guys, this data is showing us right now we're essentially fine, and we should be, because loan modification, we were reset, and obviously massive equity. But again, I'm telling you guys, what you need to focus on is serious delinquency status, right? But let's look at one more chart just to see how effective loan modification has been. Now, this chart is super cool, you guys. I wish I would have referenced this chart earlier. I've been using a Mickey Mouse chart from Black Knight to show this information. So this is way, way better. Let me read this. This is the average time to foreclosure. And essentially, it's just saying it's decreased, but let me read this. Properties foreclosed in Q3 of 2022 had been in the foreclosure process an average of, you guys ready? 885 days. And that's down from 948 days from the previous quarter. So what I want to point out is 885 days over 2 years. So the average person can stay in their house for over 2 years to try to get out of foreclosure. So what I'm saying is part of the reason we had a foreclosure crisis in the past, and you can see this here, is banks did not want people to stay in their house. They immediately repoed it. So if you look here, the average person during the crisis up until about 2009, they were only in foreclosure process for 200 days. 200 days, guys. So essentially what this is saying is people have 4 to 5 times more time to stay in their house and try to get through the foreclosure process and try to catch up. 4 to 5 times more, you guys. So to me, that is a good thing for society. That is a positive thing for families, because I believe that families should have opportunities to come current and should be kept in their house for as long as possible until, quite frankly, they just can't afford to own the house anymore. I think that's good for society. And I don't think that we should be happy to get a whole bunch of inventory for foreclosures, because again, you guys, in order to get a foreclosure, someone has to go through a financial nightmare. Do we really want that? So I like loan modification. I want people to have an opportunity to catch up on their mortgage. But here's the thing. Let me know what you think. Comment below and let me know if you think that people should have 2 to 3 years to catch up on their mortgage before getting kicked out. I believe they should. Now, there's 3 things that I want to conclude on for this video. Now, number 1, loan modification has proven highly effective method at keeping families in their houses that are currently going through financial struggles. And I say, thank goodness for that. Number 2, it is possible and it is likely that a foreclosure crisis could essentially happen what feels like overnight. Now, obviously, it's 6 to 12 months, even more lag. But essentially, this crisis, if we don't focus on what's happening, it will blow up overnight and it will blindside many, many people. Now, number 3, we do not, I repeat, we do not need a foreclosure crisis to experience a price crash. However, we're still going to have a foreclosure crisis. My only point is, Things are so unaffordable right now. Demand is so crippled right now. People still have to sell new construction, and some people just have to sell. You guys, our housing market right now is going to crash with or without a foreclosure crisis. Now, other than that, you guys, I really hope you guys got some new perspective and new insights from today's video. And if you're out there investing in real estate, you know I wish you luck, and I hope you win.